This e-commerce giant has lost 76% of its market cap in the recent sell-off, so is it the right time to buy at today's price? Let's explore in this video what is going on with Shopify stock these days, why it has lost market cap recently, the latest news about it, and at the end my perspective if this is the right time to buy now. Hi, my name is Sunny and I make content that affect a common man financially, so let's dive into today's topic, Shopify Buy Now. If you are new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. This e-commerce giant out of Canada has been darling of the stock investors for a while now, but lately has lost considerable shareholder wealth. Today on the day of recording, it is down over 11% while closing at $445 a share, has lost almost 16% in the last 1 month. Its market cap is down by almost 75% in the last 6 months. And finally, you would have lost over 71% if you had owned it year to date. You need to go back almost 5 years to have a respectable 262% return if you had invested in the stock for that long. One of the major reasons behind Shopify losing this immense shareholder wealth is because of the sentiment in the stock market these days. We all are well aware about increasing interest rate as the Fed is trying to tame stubborn record inflation. Therefore, it was but natural growth companies would be facing collapsing valuations. In my limited wisdom, it got caught in the frenzy selling of e-commerce stocks where investors are not exactly looking at valuations. In today's market, if company is reporting good results, it is an okay news, but if reported results are bad, the stock will be hammered. If you look at other e-commerce stocks like Amazon, they are also facing extreme headwinds in spite of showing relatively good quarterly results. Shopify's stock price has gone down by 22% ever since it disclosed its Q1 profits, which fell short of what analysts were expecting, so it got hammered. At the same time, company's president was trying to focus investors' attention towards their expanding roster of merchants along with its long-term growth prospects. The company is trying to navigate change in spending habits of retail shoppers who are now more inclined towards physical stores than online as most of COVID-related restrictions are over now. Now to offset the loss of business, e-commerce companies like Shopify or Square are exploring ways to venture into business of lending money to their retail merchants who use their online platform. The idea is to collect fee along with possible shares of future sales, which could be beneficial both for Shopify as well as the retail merchant who uses their platform. No doubt this can be developed into an independent business vertical for the company, but investors need to be careful about the highly competitive nature of the business and the risks that comes along with money lending. In spite of downward trend in Shopify stock price, investors are yet not willing to bet against this Canadian e-commerce giant. It has got very strong brand recognition, good track record, and the suite of services it offers retail merchants seems like a good package. It has been there for a while, having a good first mover advantage in the e-commerce space alongside ease of use both for retail merchants as well as consumers, bringing a sort of stickiness with its products. Stock investing involves a lot of human emotions apart from financial analysis of the underlying asset. Therefore, retail investors still are bullish about Shopify in the long term. According to TipRanks, analysts are predicting a 12-month price target of around $600, thus giving an upside of over 70% from today's price and a moderate buy rating. In my limited wisdom, its price to earning ratio is still comparatively high, but being a complete package for its end users that none of its competitors offer in a way justifies little premium investors are willing to pay for the stock. Now, do you think it can go down even more? Surely it can. Welcome to the world of stock investing. For a typical growth investor who has a long-term investment horizon, taking a small position in Shopify can be a good option to start where you need to be consistent while not panicking if it goes down in value. Rather, build a small position bit by bit over a long period of time might be a good investment strategy, but as a disclaimer, I don't have any position in this stock as of now. I hope it makes sense as I'm just a random guy on YouTube having an opinion and not even a financial advisor. So please consult one before investing. If you had found value in the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.